Now, in Ghana, exporters are bracing for those tough times ahead as the U.S. imposes those new tariffs on goods from Africa. For decades, Ghana has enjoyed duty-free access to the U.S. market under that African Growth and Opportunity Act. But a new 15% tariff is now squeezing businesses already dealing with high shipping costs. CGTN's Nabil Ahmed Rufai tells us more from Accra.
Ghana has been exporting yams duty-free to the U.S. market under the African Growth and Opportunity Act, or AGOA, for more than 20 years. Exporters are worried that Washington's new 15% tariff means every shipment will now cost more, and producers of these yams could be the hardest hit if consumers in the U.S. are not ready to pay for their food.
Because it is not really dominating their economy, they are not really ready. They so want to pass it on to the exporter. And once you are passing it on to the exporter passes it on to the producer. So if producer was selling for maybe 2 cities, it means that the producer, the exporter will say, look, I have wine and this is, so you have to reduce that 2 cities to 1 city, maybe 80 pesos.
Under the AGOA program, a carton of yam is sold to consumers in the U.S. for between $70 and $100. But with the new tariffs, exporters say consumers are likely to pay about $120 for the same quantity of yams. Last year, Ghana exported about $1.2 billion worth of goods to the U.S. market, with apparel and textiles, yam, cashew, and cocoa, all AGOA-related products, making up a significant portion of the sales. Analysts now project that the value of exports from Ghana to the U.S. could decline with the new tariffs.
There's room and there's scope for Ghana to tap into other markets. I think particularly in East Asia. So China, we're seeing growing demand for various non-traditional exports. In Japan, there's same. And then when you come to the Western Europe, where a lot of like Ghanaian cassava and yam and cocoa products go to, again, the demand is there. And then lastly, within the African market itself,
he suggests that exporters must now seek alternative markets, including the African Continental Free Trade Area, or AFCFTA, which opens the market for 1.4 billion people on the continent to trade amongst themselves. Ghana's exporters say the search is on for new buyers, and the focus now is shifting to markets across Africa, Asia, and the Middle East. But they still face a hurdle with transporting their goods within Africa.
The only difficulty we have within the after market is infrastructure and other things. I mean, because if I'm supposed to send something to Kenya by sea, it takes me 64 days. The things go all the way to Europe before they send it. There's no dedicated vessels to that, right?
The government says it is putting in measures to ease regulations and remove barriers so Ghanaian exporters can take better advantage of the AFCFTA. But for exporters here, adapting quickly could mean the difference between survival and collapse of their business. Nabil Ahmed Rufai, CGTN, Accra, Ghana.
Well, earlier I spoke to Tilewa Adebajo, who is the CEO of CFG Advisory, about the prospects for an extension of that AGOA deal and also whether AGOA still carries the same weight that it did for Africa before the Trump administration. Take a look.
Well, it's what is on everybody's mind. But for me, I think the AGOA is more or less history. The reason I say that is this. The Trump administration is not very consistent in its tariff policy. It has abandoned the AGOA, and for instance, take South Africa. There's a unilateral 30% tariff on South Africa, irrespective of prior AGOA arrangements. So it's like they're targeting each country, and right now with the fact that America is looking for some countries to take its criminals and its refugees, in Africa. So they're trying to do deals with African countries, and they're using tariffs and visa as bait. I think this is very sad for the continent, unfortunately, because this sort of trade and diplomacy is not really the best. It's not a progressive way of looking at how you want to deal with Africa. AGOA, I think, is on its last legs, to be honest with you, at least under this administration.
Quite interesting, because the White House did say that the administration does support a one-year extension of the deal. How reassured should African nations be about that? Of course, you say you think the deal is dead in the water. They haven't actually announced it yet. So should we believe what the administration says?
Look, if I'm an investor, for instance, and I want to invest big time in Africa and use it as an opportunity to export my goods to the States through the AGOA window, and I'm hearing about a one-year extension, it doesn't give you any confidence to make these long-term investments. So even if you are an existing beneficiary of AGOA and they tell you that you only have a one-year extension, you're going to start thinking, what's going to happen after 1 year? It's not going to create an enabling environment for people to make significant investments. And if you're already an existing beneficiary, there's also doubt. You're going to start looking at other alternatives to say, well, this might go next year or might not go next year.
And you've raised a great point, because even if it is renewed, will AGOA have the same impact it had before? Especially in light of those bilateral tariffs that Trump also introduced in August. How do you think those play into that whole argument?
There's a divergence of tariffs in America. And even if you take a look at America itself, there's even a lot of doubts about those tariffs and their sustainability in America. Yes, we all agree, I think the numbers are very clear, that year on year, tariff and duties in America, the collection rates have gone up by 150% year to date. And then there's been a judgment that has put in question the legality of some of these tariffs. So eventually, if these people in courts in America win their cases, the American governments might have to refund those tariffs they've collected from some of these companies.
And I just want to touch again on some of the damage that has been done to AGOA, even if it is renewed. You talked of the uncertainty, which has now begun to impact businesses. Buyers are holding back on their long-term orders. How much is this lack of clarity on the deal damaging sectors that have benefited from AGOA? What does a post-AGOA Africa look like? And what does this also mean for the future of US-Africa relations?
Well, it puts a big damp on US-Africa relationship. The impact of AGOA itself, I think, it's not as if African countries themselves have taken full advantage of AGOA, but it was something that at least we know was there. And I think as time goes on, we could have been able to channel investments to be able to take advantage of this. Maybe the utilization for AGOA was maybe about 40%, but it was probably the best deal that Africa had with America. And I think it was the only thing going, because, traditionally, China has now become the largest trading partner for Africa. Africa has really looked eastwards, and America really is not a big supplier into African markets. And most of what America takes from Africa is still minerals and oil and gas. And even then, China is even taking more of that from Africa than the Americans are doing that. And with this sort of tariffs and a lot of things, a lot of African countries are going to be looking elsewhere. They're going to be looking at alternative markets and probably look more to Europe as they have looked to China.